Hey everybody, it's RT here from Hxro Labs on part 1 of how to spot a trend reversal. Today we're going to talk about identifying trends. First off, we're going to try to select the most appropriate chart out of lines, candlesticks, and Hxro charts. After that, we're going to look at our time frames. We want to think about what time frame are we looking at, how those time frames interact, and where we should start. Lastly, we will finish with a little drag and drop practice. It's one of the best things you can do to help yourself spot these trends without having to draw them up is to practice drawing them up. Now, you might have heard a lot about moving averages and how great they are at spotting trends, but they are not as good as what we're going to work on today because they're a little bit lagging. I've got on my chart the 12 and 26 EMAs. So they hug the price a little tighter. They will give you more signals. They will give you faster signals. As a result of that, they will give you some more fake out signals as well. As you can see here, there was quite a bit of chop. By the time that this trend flipped bullish, price was already all the way up here. By the time it flipped bullish down here, it was already all the way up here. So these are lagging and they're not as clean as simply looking and learning how to hunt market structure. So we're going to work on that today. The line chart removes a lot of the noise that you get with wicks. So on these charts, you can see the wick came all the way down to 3,800. Now that's important information and that's why candlesticks include it. But when it comes purely to spotting trends in markets, I personally like to use the line chart because it moves a lot of that noise out of the picture. You get a real clear picture of where the highs and the lows are. Alternatively, you could check out the Hxro chart, which uses a slightly different algorithm for calculating the candles using averages and previous candle averages. And it just paints a slightly smoother picture. So you don't get the same kind of noise you do on the regular candlestick chart. You get slightly smoothed out trend looking things. So you'll see a lot of indicators based on TradingView, based on the Hxro chart. Today though, we're going to zoom in and focus on the line chart. So you can see here on the weekly, I've drawn it up with higher lows, higher highs, and lower lows. And that is a clear way to visualize a trend. So when price is moving up, it made a higher high. When it came back down, it didn't fail, it didn't crap out, it made a higher low. Then again, higher high, higher low, higher high, right? So this was our 2017 blow off top. When did that trend end? Technically, it reversed right here, okay? We had a lower high here, which could be the signal for the ending. And then it was the confirmation of that was with the breakdown right here. And of course, now we are into a bear trend and that lasted for quite a while. That didn't change until we put in a higher low down here, which was a potential reversal. And then once we broke out of here, that was the confirmation. And as you can see, the bulls caught wind of that and they ran the market all the way up to 14,000 on the higher wicks. It got all the way up here and it chopped around a little bit. So on the weekly, you can see you got a smoothed out view of the trends, really clean stuff. There was only one anomaly on this chart and that was right here as there was a small downtrend happening and then there was a higher high and then a lower low, just a big old anomaly. And that was caused by the COVID sort of market worldwide panic dump, and that makes sense. That is a bit of an anomaly in itself. And since that anomaly has cleaned itself up, you can actually see here, since we're speaking of trends, we might as well put on a little trend line. We're basically right back to where we were before the big COVID chop. Kind of interesting, is it not? So zooming in here on the last part of this chart, we're going to go take a look at the daily. And as you can see here, we had that downtrend and we got into an uptrend and there was this consolidation and chop. And this is why it's so tricky to trade what traders will call chop, because there's no clear trend. It can be very difficult to trade this kind of chop because a lot of people want to buy the breakouts or sell the dumps. And that is what gets you wrecked when you're in a consolidating market. So identifying trends becomes that much more powerful because when you know you're in a trending market, the approach to trading it is fairly straightforward, and some would even say simple, although it's never quite as easy as it looks after the fact. One of the things I love about interchangeable time frames, for example, this is a weekly, the uptrend, we don't have a ton of information. There's only a handful of pivots there to work with. On the daily, we actually get an advanced signal that the trend might be changing. So the weekly, it looks all good, we're heading up, and that's a powerful signal. We should pay attention to that. On the daily, we've actually just put in a lower low than right here, and then a lower high, and we dumped to the lower low. This potentially is a lower high. If we weren't looking at this daily, we would see on the weekly, oh, higher low, and we're just moving off. So that's why it can be really confusing, especially on places like crypto Twitter, where you might get one guy saying, hey, look, we're in an uptrend. Another guy's like, hey, look, we're in a downtrend. Then 10 other people are on the 4 hour like, hey, look, we're getting chopped up. Identifying your time frame, trading your plan, trading with what you know is so important. And that's why it can be really tricky navigating social media, YouTube, things like that. When you're trying to make decisions, it's really ideal to figure this stuff out for yourself. And that's what we're here to do today, help you along that path. Now, zooming into the 4 hour, you can see here, there's a whole lot more noise and it can be very difficult even just through this area. Whereas on the daily, it was pretty clear that we were in a higher high environment until here. And then If you're trading that daily uptrend right here and you wanted to get out, after this lower low comes in, it's all about trying to find your exit at the next lower high. And of course, if you're wrong, you have to eat shit and get back in up here. But generally speaking, this is where you want to be thinking about an exit if you are trading this uptrend right here. Now, thankfully, there's tools that you can use for this, and you guys know if you watch any of the Hxro Labs live that I love the fibs. And oftentimes, if you get this lower low and you're feeling bearish and you're like, oh man, that looks like the beginning of a trend reversal, you can often catch your exit up here in the short RLZ if you draw it up properly. Later on in the series, we'll get into specifically how to trade these trends. Now, sliding over to the 4 hour, you can see here, there's a lot more noise, and you could go through this and find slightly different results than I did. When you get into this kind of a noisier market, you can choose how you want to draw it up. Generally speaking, though, it is a little easier on the higher time frames. So I'd recommend you start there as you start learning this stuff. The weekly, it's pretty clear as day where your highs and your lows are coming in, and just train yourself to recognize what the significance is of each of these pivots. Sometimes it's continuation, sometimes it's potential reversal, and then sometimes you end up with a confirmed reversal. That's a powerful signal. Practice this. I would say start with the daily or the weekly. Here on the 4 hour, you can see I've set it up so that if you hold down control and then I can just drag this over and place it where I want to place it. Technically, I could have put another one here. There was a slightly higher high. Technically, I could add one here. So you have to decide how picky you want to be with the pivots. Like right here, is that a pivot? Not really. It's just kind of continuing up. So the more pronounced the pivot is, the more powerful it is, more likely, that you should be drawing it up. I hope you enjoyed today's video. If you did, hit the like, hit the sub. Take care, everybody. And in the meantime, whatever you do, always play from a position of strength.